All right, let's just jump right in. We're going to break down one of the most chaotic weeks the market has seen in a long time. That period from March 17th to the 21st, 2026. And if you just glanced at the headline numbers, you would have completely missed the real story, the absolute brawl happening just beneath the surface. So, on the surface, things looked kind of straightforward. The S&P 500, the big one, it ended the week down nearly 3%. Not great, for sure, but not exactly a market crash either, right? But that's the thing. That one little number is a total smokescreen. It's hiding this massive tug of war. Because while the average was sinking, you had these two completely separate stories playing out. One sector was rocketing to the moon, and the other was getting dragged to the bottom of the ocean. And this chart, it just lays it all bare. Look at this. In the middle, you've got the S&P, down almost 3%. But check out the extremes. On one side, you've got a classic energy giant like ExxonMobil, actually up for the week. And on the complete opposite end, a tech favorite, Micron, just gets absolutely hammered, down more than 8%. This right here is the great divergence we're going to break down. All right, so first up, let's talk about the winner. And honestly, it was the most unlikely hero of the week, energy. I mean, in a market that was just a sea of red, these stocks weren't just staying afloat. They were absolutely on fire. And this number right here, 159.67, that's not just a stock price. For ExxonMobil, that was history, their first ever all-time closing high. Think about that. While pretty much everyone else was hitting the panic button, Exxon was quietly becoming the absolute best trade of the entire week. So you're probably asking, how on earth did that happen? Well, it was like the perfect storm of big picture events. First, you had the Fed basically saying, hey, inflation is sticky, it's not going anywhere. That's what we call being hawkish. And when that happens, investors run to energy stocks as a safe harbor. Then, bam, a geopolitical shock hits, messing with the world's oil supply. And if you need any more proof, just look at the main oil fund, USO. It shot up over 5.5%. The trend was undeniable. And this was the big one. This was that geopolitical shockwave. On Thursday, news breaks that the world's largest liquefied natural gas facility, over in Qatar, was hit, attacked. Production grinds to a halt. And what happens? Oil prices just go vertical, instantly. And they carry stocks like Exxon and Occidental Petroleum right up with them. Okay, so now let's flip the coin. On the complete other side of this battlefield, you've got tech. And they were living in a totally different universe. It was just a week of absolute whiplash, where it felt like even the best news in the world couldn't stop the bleeding. I mean, just look at how crazy this is for Micron. They come out with a monster earnings report. They beat expectations by 39%. You literally could not ask for better news. And how did the market react? It took the stock out back and just destroyed it, down over 8%. It just goes to show you how toxic the mood around tech was. And it wasn't just one bad apple. With Micron, those amazing earnings were totally ignored because people were scared about future spending. Then you have Nvidia, an AI cloud company. They surprise everyone by saying they need to raise a bunch of money and the stock just tanks. Even Palantir, which looked like it was perfectly set up for a big move up, nope, it just got swept away by the awful sentiment for the whole sector. So, we've seen what happened, right? Energy way up, tech way down. But why? What were the macro forces, the puppet masters, really pulling the strings behind the scenes? Let's zoom out and look at the big picture. The big, scary word of the week was stagflation. And honestly, it's pretty much the market's worst nightmare. It's this toxic combo of high inflation, so prices are going up, and a stagnant economy, so things aren't growing. And when traders start whispering that word, they dump high-growth stocks like tech and pile into stuff that holds its value during inflation, like, you guessed it, energy. And the hits just kept on coming all week. Wednesday, we get a hawkish Fed and some really hot inflation numbers. Boom, stagflation fears confirmed. Thursday, that attack in Qatar shocks the energy market. And then to top it all off, Friday rolls around with this giant, chaotic event that just poured fuel on the fire. Yeah, that event is called triple witching. Sounds dramatic, right? All you really need to know is it happens 4 times a year, and it's when a ton of different kinds of options and futures all expire on the very same day. It forces the big players to make huge moves, buying or selling massive amounts of stock. And what that does is it basically acts like an amplifier for whatever the market is already doing. In this case, it was like pouring a tanker truck of gasoline onto that tech sell-off. So, yeah, what a brutal week. But you know what they say? Chaos is often the best teacher. So let's take a breath and boil this whole crazy week down into 8 solid rules, key lessons we can take away from all this. Rule number 1, energy can be your best friend. Seeing Exxon hit an all-time high while everything else was burning, that just proves the stagflation playbook works. Rule 2, respect your stop losses. Seriously, the folks who had their automatic sell points set for Navius and Palantir saved themselves a world of hurt. Number 3, your timing matters a lot. Trying to be a hero on a crazy day like triple witching is just a bad idea. And 4, be smart about how you structure your trades. For example, a successful short on the S&P 500 used different kinds of contracts to manage the risk. Okay, rules 5 and 6 are basically the same thing. Do your homework. Always, always double-check your numbers from a source you trust. A simple typo can cost you a fortune. Rule 7, size matters, your position size. Going all in on Micron, even with that great news, was a mistake because the overall market mood was just too powerful. And finally, number 8, don't lose faith in your core idea. The big picture story for why energy was a good bet didn't just vanish overnight. A little dip or a crazy week doesn't mean your whole thesis is busted. So what's the bottom line here? This crazy week, this huge split between energy and tech, is just such a powerful lesson. It shows you there are always these deep currents moving under the surface of the market. And it really leaves us with one critical question you have to ask yourself. When the next storm inevitably hits, is your playbook ready?